I was getting quite depressed sitting there and hearing about all that death and destruction and causes for concern around palm oil and forestry. And I guess I kind of in a sort of in some way I want to deliver a sort of message of hope that actually there are a lot of pitfalls and booby traps and so on, but that actually I think there is a chart you can course through that and make money and do the right thing at the same time, which is the holy grail, I suppose, isn't it? So I'm going to talk a little bit about sustainable forest investment in Asia and a company, New Forest. New Forest, very, very briefly, is an institutional fund management, asset management company. We have offices in Australia, the US, and Malaysia, and Kota Kinabalu, where I'm based. And our investment strategy is built around forestry and sustainable plantation forestry in particular, and what we call it Forestry plus exposure to environmental markets. So that's carbon through REDD, biodiversity, and water. The company has a strong sustainability commitment. We're a member of FSC and ASRIA, for example. We're a signatory to the UN PRI. You can add us to your list. And we think that it's important that and forestry has a role to play in contributing to reduction of greenhouse gas emissions, protection of biodiversity rights, protection of biodiversity, recognition of indigenous people's rights, and so on. The sort of history of forestry in Asia, in a nutshell, it has its roots in logging and harvesting of timber from natural forests, low barriers to entry, low costs, relatively low operating costs, very plentiful natural forests with large volumes of merchantable timber. And because of the low costs and barriers to entry, it meant that you could have a relatively inefficient operation and still make a lot of money. It's an extractive industry. And we've seen the last frontiers of natural forest, primary or intact forests, have largely been logged out. There are a few pockets in Indonesia, for example. Maybe there are 10 or 15 years left of primary forest in some of the larger logging concessions. There's almost nothing left in Sabah, maybe a little bit left in Sarawak. So, I mean, across the region, there's really very little primary unlogged forest. And the log production from natural forests is collapsing. I've got a couple of a slide on that a little bit further on. So I think that the future of the industry is going to be moving away from this sort of extractive natural forest harvesting to being plantation development. Our focus is on a range of countries, but we focus principally on Malaysia, Indonesia, and Vietnam, where we think the opportunities for sustainable forest investment are greater. This is some figures to put there. So the story I was telling a little bit in perspective. You've got there's a high correlation between GDP growth and timber demand. So timber demand is growing rapidly, and as per capita GDP rises in the region, and Asia is becoming a major center for the forest industry. So a lot of the timber products manufacturing is moving to the region. And I talked a little bit about the production of timber from natural forests is collapsing, partly in response to governments restricting the harvest in natural forests, and partly because the areas are continuing to be being logged out. Large areas are being converted. Majority of areas of logs coming off converted out land. The conversion is coming to an end. Large areas have been converted already to agriculture, and so log production is slowing on these areas. And what we've seen at the same time, while there's a need for a shift to plantation development, actually Asia's been relatively slow in making that transition, and so we like to see a sort of wood deficit gap with plantation wood not really coming on stream in the volumes required for quite some time. And you compare it with Latin America, for example. I've left China out of this, but plantation development in Asia isn't developing as fast as in other parts of the world. a lot of the plantation development in this region is for softwood for pulp, softwood hardwood for pulp manufacture and grown on short rotation. So there's a kind of there's a deficit in for solid wood for high value hardwoods. And a lot of those high value or higher value hardwoods are being imported from around the world. So China as a major manufacturing hub is importing from around the world. And so there are major advantages if you can supply regional sourcing with reduced costs of shipping and so on. So there is investment opportunities there. I won't go into this in great detail, other than obviously one of the key ways of covering on environmental social governance risks, environmental social risks is forest certification. And obtaining FSC certification as the sort of premier benchmark of good forest management, and also securing carbon and biodiversity rights and getting exposure to environmental markets are a major way of being able to demonstrate and to drive sustainable forest management. Essentially, our investment strategy is to acquire underperforming plantation companies, improve the forest management, introduce certification, and also we look at greenfield sites developing degraded land for high value hardwoods, higher value hardwoods. So the certification and environmental markets, so third-party certification and verification of sustainable forest management, the costs of that are not that great. In terms of improving operations to meet these standards is not that great. Where the biggest costs come where you have to set aside large areas of land for high conservation value from production, and that has a significant cost. And also when you talk about natural forest harvesting, when you have to significantly reduce your harvesting intensity. And I think this is an area where environmental markets then has a role to play. So jumping around a bit, I'll jump straight to this last point, that environmental market revenues from these areas set aside potentially enables the company to generate significant revenues from those areas that are set aside from production and offset the costs of doing the set aside in the first place. But aside from that, there are many other commercial benefits to achieving certification, where the costs aren't substantial. And those include price premia, which are essentially ephemeral things. Once supply catches up with demand, they disappear. But securing long-term market access for certain products, very significant commercial benefits to doing that. You're reducing a lot of your project and political risk through improved relationships with communities and with stakeholders. Your assets are more liquid. It's easier to sell your operations if it's well run and there's transparency around it. There are a larger number of buyers out there who are willing to consider investing in your asset, and you can get access to lower cost or improved access to debt capital. We look at the development finance institutions, development banks, for example, who are keen to lend in the region to stimulate economic development, and they're looking at making lending to sustainable operations that can show that they're managing your forest sustainably in accordance with third-party standards. Also get improved access to licenses, operating permits. You have a better relationship with the government. Government sees you as a responsible player in the industry. You're more likely to get access to additional assets. There's the reputational risk reduction and the concomitant benefits of that. And it is actually possible to get some operating efficiencies and cost savings through improved management. I've seen this across a number of operations which I've been involved in the FSC certification of. One of the early ones was actually in the UK, and there was for a long time the government, the Forest Enterprise, which manages almost 1 million hectares of forest in the UK, and they resisted certification for a long time. When they finally got certified, it took them a process of 2 or 3 years. They ended up saving $2 million US a year on chemical costs when they cut down the use of the inefficient and wasteful use of chemicals. So just an example, there are operating efficiencies that can arise from improved management practices under certification. I'll just take 20 seconds to talk about one of my favorite projects. This is the Malua Biobank, and I talked about environmental markets. We talked about REDD. This is a biodiversity bank, a biodiversity conservation bank in Sabah. It's a 34,000 hectare or 80,000 acre area of logged over forest concession. And we've taken a long-term license over this area in a joint venture with the Sabah government. And we're developing it as it was of outstanding sort of biological significance, particularly for the conservation of orangutan. So the essential value there in protecting this area not is carbon, but also is biodiversity. It's a very beautiful area, outstanding, lots of IUCN red listed species. In this area, we're developing biodiversity credits and working with the RSPO to develop a retrospective biodiversity offset product, which would support RSPO members in meeting existing RSPO requirements. So we heard a lot about REDD. This is an example of another type of project where potentially you've got these large areas of set aside can generate revenues rather than being a liability or a cost, net cost to the operation. They require the development, a lot of market development work, and that's something that we're busy doing with this project and with the Roundtable on Sustainable Palm Oil. Thank you very much.